XRP and the entire cryptocurrency market is down today, but it's kind of to be expected after the core PPI news came out that it was a lot higher than expected and inflation is kind of growing rampant. But this is not the time to panic. I still think this is actually a buy the dip opportunity, and I'll explain why in today's video and why this does not cancel the bull run and the 4-year cycle theory for crypto. Now, remember, as always, never financial advice, just trying to put you guys on the plays that I'm in. If you're new around here, smash the like button for the YouTube algorithm to get this video out to more people, and also consider subscribing to the channel. So the overall market is pulling back today. Guys, we were on a very nice, steady, basically 7 or 8 day green run. We didn't see crypto slow down whatsoever. And of course, Ethereum up 18.5% on the week. We broke basically near an all-time high at 4770. Almost to the 2021 high, but if you guys look at the last month, ETH has been on an absolute rip from 3,000 and around all the way up to 4,700. And remember, on the way up, we need to see corrections, especially these 3 to 5% corrections are pretty typical of any market. And with today's pullback, it's actually justifiable with how the overall market has been performing. So with that being said, when we look at XRP, you need to make sure you're always zooming out and paying attention to the big metrics. We still have over $12 billion exchanging the hands of traders over the last 24 hours. We know on July 18th, we topped a new all-time high at $3.68, and we were heading towards that actually. Just yesterday, we were above $3.33 last night going into this morning. And then, of course, the news came out that we were all worried about. But let's go ahead and look at it from a macro perspective. First and foremost, remember, it's not only your crypto that is down. It's not only XRP that is down. It's the entire market pulling back or correcting. $100 billion equivalent in valuation for the crypto market was wiped out in the last 24 hours. Bitcoin down about 1.3%, ETH 3.37. We're seeing XRP actually hit quite harder than a lot of other major cryptocurrencies. But red is important during bull markets. Let's take it to the Coinbase letter. So this is kind of, again, talking about the broad crypto market and all general risk on markets. And then we're going to dive into XRP related news more specifically. But core CPI inflation back above 3%, came at 3.3%. The expectations was 2.5%. The most interesting thing here, though, guys, is the discrepancy between PPI and CPI, the consumer price index, and if we look at it from the producer price index. Usually PPI leads CPI in terms of metrics on the direction the markets are going. But this could be something that is very short-lived and transient per what's expected from a macro perspective when it comes to the Federal Reserve and what is going on in terms of Donald Trump's tariffs and now actually feeling what they are doing in the market. President Trump is calling for a 300 basis point rate cut and is set to replace the Fed chair, Jerome Powell. Are we ready for next? Are we ready for what's next? It's a full thread. We'll dive into this and talk about some of the things that they highlighted here because I think it's important for us to know what's going on before we jump into some specific XRP news that is also creating maybe a little bit of fear amongst the community, but should be an opportunity to double down and buy more into your favorite crypto. And for me, XRP is definitely one of those. So if you want to start trading cryptocurrency, getting into XRP, consider doing so with my link for I Trust Capital down in the description below. The promo code is your POP8, and buy and sell crypto with I Trust Capital. They're going to give everyone who signs up for either an IRA account or a premium custody account an extra $100 to do so. In addition to your inflows that you decide to put into your account. But premium custody gives you institutional grade custody for your cryptocurrency. Read about it, learn about it. I think you will be more than impressed to see what they've done over the last 4 or 5 years now with their crypto. We don't even call it exchange or a broker, but instead it's something where you can keep your crypto held. And also they have traditional Roth and SEP IRAs with very respectable staking protocols, as well as really great yields. So this week's inflation data was not ideal. Core CPI inflation is now up to 3.1%. Both headline core and core PPI inflation are both above 3%. As seen in the below chart, per zero hedge, PPI inflation is clearly re-accelerating. But here's where it gets even more interesting. The question has shifted if the Feds will cut rates. It is now how many rate cuts will we get? As shown below, there's a 94% chance of a rate cut in September in 2025, with markets pricing in a base case of 3 cuts this year, September, October, and maybe even in December. This comes as inflation is now actually rebounding after it was finally suppressed and looking like we were ready to enter that 2% goal that the Federal Reserve has for inflation data or inflation metrics in the United States. And Trump says that's nothing. President Trump is now calling for a 300 basis point interest rate cut immediately. This would be 3 times larger than the 100 basis points cut on March 15th, 2020, the largest in history, guys. Fed Chair Powell is refusing to do so for now. Feds should cut rates by 3 points. Very low inflation, $1 trillion a year would be saved. Of course, he's looking at it from the U.S. debt and U.S. expenditure. So again, Trump has said that he is narrowing down his list for the next Fed Chair, Federal Chair Jerome Powell. His term will end in May 2026, and the new Fed Chair announcement is coming soon. Markets will begin trading off with the new Fed Chair guides over Fed Chair Powell. This is clearing a path for Trump to get rate cuts even as inflation re-accelerates. He wants rates down to 1% because remember, this is not the telltale sign. Having reduced rates doesn't mean that inflation will surefire continue to increase. We could again see this transient uptick in inflation data because of the tariffs that have been enacted, but then they could come back down as the market tends to normalize those and works around how these tariffs have been implemented. So in our point of view, what they're talking about specifically is mortgage rates. If they do drop to about 3%, this could potentially increase home prices by 10% plus in the next 12 months. This is per the Coinbase letter. This is a group or an individual entity that I've been following for quite some time. Very, very well known in the industry when it comes to market explanation, market breakdown, and also market sentiment analysis and technicals. The near-term effects on equities would be super explosive. 300 basis points rate cut would send the S&P 500 well above 7,000. But if it would come at a substantial cost, as we could expect CPI inflation to exceed 5% within a year of such drastic rate cuts. So right now, the Feds are actually in a pretty tough spot, and it can impact the markets, both crypto, stocks, housing, you name it, everything. Because do they bring down rates to accelerate market growth, bring substantial savings, and bring down U.S. debt-related balances that are currently just kind of looming over our heads? Or did it continue to be aggressive, push the markets down even further than we saw earlier this year, push it down, enter into something more bear sentiment, if you will, and then get us back to a new all-time high? My prediction is, based off of what Donald Trump is pushing for, we will see the rate cuts that we're expecting as the predictive markets are pricing those in, which will, of course, will turn us the other way and push us towards hopefully new all-time highs by Q4 and continuously moving into this 4-year cryptocurrency cycle that we've seen from 2013, 2017, 2021, and now 4 years later, 2025. Now, this is a piece of news that I saw earlier today that I think is also causing a little bit of shakiness in our community, but I need to make sure everyone understands that's holding XRP, that this is something that is, I think, a little bit overblown in the media. And that is, Coinbase cuts XRP holding by 57.4% amid regulatory uncertainty. We know that uncertainty is no longer uncertain. And mind you guys, this was per the earnings reports that was released a couple weeks ago for Coinbase. And it says here, Coinbase reduced XRP holding by 57.4% since June 2025, sparking speculation about strategic shifts amid regulatory uncertainty. The move aligns with broader caution over XRP's legal status post-SEC case dismissal, though no official reason was confirmed. Institutional asset reallocation and market dynamics highlight Coinbase's dual role as both platform and participant, influencing token liquidity. So, with that being said, my take is, guys, this is still the time to double down. You're going to see these kind of headlines and things happen, and they being entities, institutions, you name it, everyone in their power will try to bring down the price of certain assets that they want to double down and buy the dip on. And right now, as XRP goes back to $3, it's at $3.09. People are going to be doubling down and pay attention to volume, pay attention to buys that are coming in on these different massive exchanges. But I think we see XRP break a new all-time high within probably the next 7 to 10 days, as long as the market doesn't overblow and overreact to the core PPI data and those reports that were replaced. And of course, right now, the biggest thing that when it comes to macroeconomics we're looking forward to is on September 5th, 2025, next month, beginning of next month, is the jobs reports. If they come out very bearish, meaning that we have a very poor performing job market, then we should expect the rate cuts beginning September of next month. So guys, be prepared, not surprised. It's still time to double down. It's still time to capitalize on your positions. Don't let the fear get to you. Always be steady, stick to your conviction, and stick to your strategy. I appreciate your support as always. Remember the link down below for I Trust Capital. Shout out to them. Shout out to all of you. And until next time, as always, everybody, keep investing. Peace.